Good evening, everyone. Hope everybody is doing good. So, yesterday's class we discussed about issue of shares at par, and we saw all the journal entries with respect to that. So, I'm giving for a minute for online students to join. Okay, let's start the class. Okay, yesterday we saw the issue of shares at par. Today we will be looking at issue of shares at premium. Issue of shares at premium. Okay. Okay. Now, at premium. So, if my nominal value is equal to 100, my issue price will be 120. How much? 120. This extra 20 is called as premium. Is called as premium. Okay. So, how much money I will get? For 10,000 shares, 120 each, I will receive 12 lakhs. Out of this 12 lakh, 10 lakhs is a share capital, 2 lakh is our security or share premium. Share premium or security premium. Now, this 120, let's split on application rupees 30, on allotment rupees 50, and first and final call rupees 50. Put together, sorry, one second. This one, let's make it as 40. Put together 120. Put together 120. Okay. First topic. On application, what is the journal entry, sir? What is the journal entry? No change in the journal entry. The journal entry will remain same. Bank account debit to share application money. How much? 30 we have received. So that will be, say for example, again 12,000 applied. So that will be 3,60,000. No change upon. Ninne an example tagondidvi ade example tagond martiddivi, so that you understand the difference between the where the journal entry exactly changes. Clear? Next, allotment. On allotment, what will happen? On allotment, what will happen is share allotment account debit, okay, to share capital to share premium. You are seeing? See here, what was the journal entry earlier? Here, share allotment account to share capital. One item ittu. Illi to share premium. Sir, what is share premium account, sir? What type of account it is? It is also a liability account. Sorry, it is also a capital account. It is also exactly like share capital. But only thing is, it is not called as share capital. It is called as security premium. Sir, why it is like a capital? It is like a capital because who is paying the share premium? The premium is paid by whom? The premium is paid by the owners. Correct or no? Yes. So, if any money is paid by the owners, it is nothing but our capital. Correct? So, in the same way, any premium we receive is also kind of a capital provided by the owners. Correct? Then why it is not called as capital only, sir? We can call that as also a capital, no? Why we have to call it again one more name, security premium? We can't call it as a capital because my capital is restricted to how much? Here, my authorized capital is restricted to how much? Sir, 10,000 into 100 is equal to 10 lakhs. But how much I am actually collecting? 12 lakhs. So, when my capital is restricted to 10 lakhs only, how can I say I am getting 12 lakhs as a capital? You are understanding? So, that is why what they do, this 12 lakh is split. 10 lakh will become my capital and 2 lakh will become my security premium. One more logic is there. Understand? What is the actual face value? Sir, face value is only 100. When face value is only 100, then your capital should also be 100 per share. How you can show it as 120? You are only telling on the share face, on the certificate, that the worth of this share is only 100. Then how you can show it as 120? Correct or no? See, that 120 is nothing but demand and supply. There is a demand, that is why I am collecting more money. And that money is not directly as a capital, it is coming as a premium. So I will have to show it as a separately as security premium. Clear? Yes? Okay. Now what will happen, appa? Now what will happen is 10,000 shares into how much we are receiving? Sir, we are receiving 40 rupees. Correct? Correct. So that will be 4 lakh. Correct, sir. 4 lakh. Now, how much should we credit to share capital, sir? Here only the catch comes. Here you can't credit the entire 4 lakhs. Sir, why, sir? Why? Out of this 40, 20 20 is premium and another 20 is capital. Why, sir? Because see here, I have called each share. How much is the price of each share? 120. The price of each share is how much? 120. When the price of each share is 120 and you are receiving 40 on allotment, we always segregate the allotment money between premium and capital. How much is the premium? Sir, the premium is 20. Here, the premium is 20. So what we do is, out of allotment money, first we will take the money towards premium. So out of 40, how much is towards premium? 20. So first we will take towards premium 20. So the remaining is how much? 20. Remaining 20 goes to capital. So that will be 2 lakh and this will be 2 lakh. How, sir? 10,000. 40 minus 20. Clear? 40 is call, 20 is share capital, remaining 20 is your premium. Clear? So always remember, whenever in the question there is a premium, then always remember to take the premium out of allotment first. Out of allotment first. Clear? Okay. So what is the entry changed? Here is the entry changed. Here is the entry change. But if you observe, here also my share capital is credited by only 2 lakh. Here also it is credited by only 2 lakhs. But debit side it has become 4 lakh. Why? That extra 2 lakh is a premium. Clear? Okay. Second entry, sir. Second entry remains the same. Bank account debit 4 lakh to share allotment account 4 lakhs. To share allotment account 4 lakhs. Clear? Next entry, sir. See, this entry is also remaining same. Only thing that changed is amount. Here there was no premium. Here there is a premium of 2 lakh rupees. This premium 2 lakh. Clear? So that premium has been collected. Next, we have received share application money. No, this also has to be adjusted against capital. Correct, sir. What is the entry? Sorry, first we will refund it. Correct? Refund entry. Share application money account debit. How much is refund? Same, sir. 60,000. 60,000. 2,000 shares extra. 2,000 shares into 30 rupees each. Application money. Clear? To bank account. 60,000. Clear? Yes. Next, fourth one. Now, out of the share application money, 60,000 we refunded. Remaining is towards our share capital. So that entry. Share application money account debit to share capital. How much? Sir, 3 lakhs. 3 lakhs. Entire entry remains same. Even the amount. Clear? Next, first call. First and final call. When you make the first call, what is the entry? Same entry, sir. First and final call account debit to share capital. How much? 5 lakhs. 5 lakhs. When you receive the money, it will be bank account debit. Bank account debit. 5 lakhs to share capital 5 lakhs. See, observe carefully. This entry, no change, including the amounts, same entry. This entry, there is a change. What is the change? Sir, the change is one, the change is in the amounts. Second one, we got an additional account called as share premium account. Very good. This entry, any change? Entry as such, no change, but amount changes. Amount changes. Clear? This entry, any change? No change. Same, including the amount, same. Clear? Next, this entry, any change? No change, same entry. So what are all the same entries? Same entry, same entry. Entry remains the same, but amount changes. Amount changes here. Clear? Here, same entry, no change. Sorry, this one. Here also, same entry, no change. Then first and final call, same entry, no change. This one also same entry, no change. Clear? So what are the entries that changed? The entries that changed is this one with amount and this one. Only two entries change. That too, the journal entry as such in this one is same. Journal entry remains the same, only amount changes. Here, journal entry remains the same, one additional account will come, that is share premium account, and the amounts will change. Clear? So this is your issue of shares at a premium. Clear? Please note it down, or you can take a screenshot quickly. Yes, done? Okay. Okay. Now, the question is, sir, you collected the premium, no, sir, what to do with that premium? See, that premium can be used for following things. What are those things, sir? Wait. You can use it for the following things. What are the following things, sir? You can use the premium for issue of bonus shares. What is bonus shares, sir? Bonus shares are free shares. Sir, why free shares, sir? Free shares to not everyone, free shares to existing shareholders. Existing shareholders. Bonus shares are issued as a free shares to the existing shareholder. So if you are having one share, they will give you one more share. So for that one share you bought it by paying the money. The one more share which company is giving, that is for free. So what is the condition? The condition is you should already have an existing share. Then only you get free shares. Next is to write off preliminary expenses. You have understood what is preliminary expenses? Any incorporation expenses, that is any expenses incurred with respect to company before the company is formed. Clear? To write off those expenses. Write off andre eno? To adjust that expenses, you can use the premium. Then writing off expenses or the commission paid or discount allowed on any issue of shares or debentures of the company. So I told you, sir, you just told me discount is not allowed. Correct. Discount is not allowed on equity share capital, but discount is allowed on preference shares and debentures. Okay. So if you have given any discount on issue of debentures or on issue of preference shares, that discount can be written off against this particular premium. Clear? And see, whenever you issue the shares, it is not done for free. So many professionals will get involved. CA will be there, merchant banker will be there, company secretaries will be there, who play a key role. All these people involved to issue the shares to the public. When they get involved, they also charge professional fees. Correct? Yes. So to write off any of such expenses which is incurred to issue the shares, those expenditure can also be written off. Then any commission paid is also allowed. Commission is, there is something called as underwriting. Underwriting is a concept where, suppose you have a company and you want to issue 10,000 shares to public. You want to issue 10,000 shares to public. Okay. Now what happens is, you don't know whether this 10,000 shares can be subscribed or not. Subscribed means what? 10,000 shares, public will be interested to buy these shares, to purchase these shares. Clear? Always remember, when we give the shares for the first time, then only the word subscription will be used. Okay. When, say for example, if company is directly giving shares to the public, that time we use the word subscription. If I already have the shares of the company and I am selling it to somebody else, then it is not called a subscription. It is just transfer of the shares between the parties. Clear? So subscription happen only when company directly issues it to the public. So I decided to issue 10,000 shares to the public, but I don't know whether public will subscribe these shares or not. Subscribe andreno, they will apply for these shares. They will buy these shares from the company. Clear? So we don't use the word buy when you are taking shares directly from the company. We use the word subscribed. You have already understood what is subscription, correct or no? What is applied? Clear? So 10,000 shares are issued to public, but I am not sure whether it will be subscribed by the people, by the public. So what I do is, I have a fear. Sir, why to fear? Sir, if it doesn't get subscribed, it's okay. No, sir. No, it is not okay, because if you don't receive subscription for at least 9,000 shares, for how many shares? For 9,000 shares, for 9,000 shares, that is 90%. If you don't receive application for 90% shares, then you cannot issue shares to the public. You cannot issue shares to the public. 90% should be applied by the public. You're understanding? So if 90% is not subscribed, then the issue gets cancelled. Clear? Yes? Okay. So what I'll do is, because of this fear, say for example, 89.9% has applied, sir, cancelled. 90% applied, good to go. 95% applied, good to go. Sir, 120% applied. Can they apply for 120%? Yes. Sir, how is that possible, sir? I told you, no. You are issuing 10,000 shares, but we have received application for 12,000 shares. Is it possible? Yes. Just now we saw the entries, no? 2,000 shares can be refunded. Clear? So, if it is goes below 90%, then it will get cancelled. So what they do is, there are underwriting agents. Underwriting agents. Who are these underwriting agents? Underwriting agents are those people who says, if public doesn't buy, if public doesn't subscribe, then I will subscribe, don't worry. I will subscribe, don't worry. So if public doesn't subscribe 90%, say public only subscribe 60%, then remaining 30% I will subscribe. Don't worry about it. This 30% subscribed, it is subscribed by underwriting agents. Clear? Sir, is it mandatory to get underwriting agents? Yes. Why? Because if doesn't get subscribed, then your issue will get cancelled. That is why we take underwriting agents. So when we take underwriting agents, then what happens is, these agents don't take your shares for free. Okay? They will charge money. That money which they charge is called as commission. That commission is called as underwriting commission. Underwriting commission. Underwriting commission. Clear? Yes? Okay. So, the premium can be used to write off this underwriting commission. To write off this underwriting commission. Clear? Sir, what if the shares is 100% applied by the public only? 100% applied by the public. Then why should I pay to underwriting commission? No, sir. Whether they apply 100%, whether they don't apply 100%, you have to pay the commission. Why? Because it is like an insurance. If you don't apply, then you will get the benefit. If they don't apply, you will get a benefit. If they apply, you will not get any benefit, still you have to pay the money. We take health insurance, we take life insurance, we take vehicle insurance. The moment I take the vehicle insurance, will they give me money? No. When they will give? Sir, when the accident happens, that time they will give the money. Vehicle insurance. Correct? Huh? How this, sir? Correct. So, what if an accident doesn't happen? Money is gone. Next year again you have to pay. Every year you have to pay premium on insurance. It is like that only. Whether they apply 100% by the public or public doesn't apply, still you have to pay underwriting commission, and you can use the premium to write off any expenses of commission. Clear? Next. providing for premium payable on redemption. This concept will come in this chapter only. This concept is there. Redemption is a word used. If you remember our first class on this chapter, I told you equity share capital is like a Tirupati hundi. Once you put the money, it is there only. It will never come back. It will come back when the entire company gets closed. Clear? Whereas I told you very clearly, preference shares or debentures are not like that. Company has a particular time limit within which they have to pay the money back. There is a tenure, there is a maturity period after which company has to pay the money back. That paying back the money to preference shareholders or the debenture holders is called as redemption. When the time comes to pay back the preference shares and debentures and you pay back, that particular process is called as redemption. So if you are redeeming any redeemable preference shares or any debentures of the company, and while redeeming, if you redeem it at a higher price, andre higher price andre ಏನು sir? Say face value of your debentures is 100. Face value of your debenture is 100, but you are going to give back 120 rupees per share. Sir, why will I do that, sir? I have taken only 100. Now you are telling I'll give back 120. Why will I do that? You will do because of that 100 rupee received from preference shares at that time or debentures from that time, I could use that in business and I can run the business and make more profits. Because they gave me money at that time, I want to pay them back something. So what I do is I give them some extra money. So this extra 20 is called as premium on redemption. Here we saw premium on issue of shares, correct or no? Yellappa, where did it go? Here we saw premium on issue of shares. In the same way, premium on redemption of shares is also possible. So any preference shares or debentures are getting redeemed at a premium. Premium means what? You are paying back more than the face value. You are paying back more than the face value. Then this premium, which premium? The share premium can be used. Then the last in buyback of shares. So what do you mean by buyback of shares? See, what happens is company issued 10,000 shares. Okay. Now after 10 years, company is very good. Profits are there. Everything is there. So what company decided? No, out of this 10,000 shares, let me do one thing. I will buy 2,000 shares. Why? Because you don't want 10,000 shareholders. Now you want only 8,000 shareholders. You want only 8,000 shareholders. So what you do is you ask the existing 10,000 shareholders to sell their shares to company themselves. Sell the shares to company. Sir, why people will sell it to company? Why they will sell it? Listen to me. Right now, say the market price of the shares are 2,000. Market price of the shares are 2,000. I will not offer 2,000. What I will do is, I will offer 2,200. Now tell me, out of this 10,000 shares, at least 5,000 people, 5,000 shareholders will be interested. They will say, my God, I am getting 200 rupees extra. Let me sell it. Correct? So like that, they will sell the shares to the company itself, not to others, to the company itself. Clear? Yes. But in India, there is a rule that company cannot hold its own shares. Company cannot hold its own shares. That means I cannot be owner of myself. Understanding? So company cannot hold its own shares. So what company does is it pays the money, takes 2,000 shares and cancels them. The moment it gets cancelled, what is the new number of shares? The new number of shares is only 8,000. Is only 8,000. Sir, why will company do this, sir? Why will company do this? Why will company do this? There are multiple reasons. I'll just give you, if I tell many reasons, you will not get everything at one shot. So simple reason I'll tell you. See, how much is the market price? 2,000. How much you are paying? 2,200. How much is extra you are paying? 200 per share. Correct? This 200 per share is nothing but company has earned a lot of profits. It has earned lot of profits. Now I want to distribute some of those profits to the shareholders. So what I will do? One, I can announce the dividend. But if I announce the dividend, I need to give dividend to entire 10,000 shares. But I don't have that much money. I don't have that much money to give dividend to entire 10,000 people. So what I do? I want to give 200 rupees per share to only 2000 people. So that will be approximately around 4 lakh rupees. 4 lakh rupees. Clear? I have a capacity of only 4 lakh. So I don't want to distribute this 4 lakh to 10,000 people. Sir, why you can't distribute 4 lakh to 10,000 people? If I distribute this 4 lakh to 10,000 people, how much it will look like? Only 40 rupees. Not fun. Maza nahi aayega. Shareholders will not love this. But if you offer 200 per share, shareholders will love it. Understanding? This is also one way of distributing the profits. One way of distributing the profits of the company. But my budget is limited. That is why I don't give it as a dividend. I give it as a buyback. Even your bonus shares is also like that only. Your bonus shares is also a way of distributing the profits of the company. Clear? Everybody is understanding? Yes? Any doubts in this? So far, so good? Yeah. One more is there, sir. I will explain it to you in a short. I don't know whether you will be able to grasp it, but listen to me carefully. Suppose company has a profit of 1 lakh. Company has a profit of 1 lakh. This 1 lakh belongs to whom? Sir, this 1 lakh belongs to owners. Who are the owners? Sir, shareholders are the owners. Okay, fine. So, shareholders are the owners of this 1 lakh profit. It belongs to them. Correct, sir. It belongs to them. Now, how many shares are there? Sir, there are 10,000 shares. So, each share, how much is the profit? Sir, each share, the profit is rupees 10. The profit is rupees 10. This is called as EPS. What? EPS. EPS means earning per share. What is your total earning? Sir, my total earning is 1 lakh. Okay, 1 lakh. It is for how many shares? For all the shares, sir. Correct or no? Why all the shares, sir? Because this 1 lakh belongs to all the owners. Okay. What is the earning per share? So, how do you do? 1 lakh divided by 10,000. So, earning per share is 10 rupees. Okay. Now, same example. Profit is 1 lakh. Owners or share. How many shares? Say 8,000. How much? 8,000. Now, what is the earning per share? Can anybody calculate, please, for me? 12.5. Now, look at it. Look very carefully. Here, what was the earning per share? Sir, 10 rupees. Here, what is the earning per share? 12.5, sir. Did the earning per share go up? Yes, sir, it went up. Did your profit go up? No, sir, my profit remains same. Then what happened? Here, your earning per share is 1 lakh. Here also, your earning per share is 1 lakh. Correct? Then what happened, sir? Suddenly, why it went up? Because the denominator decreased. So, the moment your number of shares reduce, profit per share increases, earning per share increases. This is also one of the motto behind buyback. This is also one of the motto behind buyback, to increase earning per share of the shareholders. Clear? Everybody understanding? Yes? Okay. So you can use the premium for this particular 5 reasons. One is what? Bonus, buyback, and then preliminary expenses, then any discount or commission on issue of shares or debentures. Then what is the last thing? To write off any expenditure with respect to redemption of preference shares or debentures. Clear? Okay. Now, see, where is the journal entries? See, in this journal entries, we saw the money is getting paid in installment. Correct or no? Application is salpa duddu, allotment is salpa duddu, first and final call is salpa duddu. Installment, first installment, second installment, third installment. Application is 1 installment. Allotment is 1 installment. First and final call is 1 installment. Clear? Sometimes what happens? Actually, in reality, what happens is they will not ask in installment. All the money will be asked in one shot. While applying, only pay entire money. So that time, what are the journal entries? If you are issuing it at par, 100, issue price, nominal value is equal to 100. Clear? At that time, what happens, sir? One is you will receive the money in bank account. So bank account debit 100. You will not create share application money, share allotment money, share first call account. Enu barala. Yake? Because there is no installment. There is one shot. So what happens? The entire money will go to directly to share capital account. Only one journal entry, done and dusted. Clear? Sir, what happens if it is issued at premium, sir? Say issue price is 120, nominal value is 100. What happens, sir? Same, sir, no change, only the amount will change. Bank account debit 120 to share capital 100. Why 100, sir? 20 rupees is premium. Premium should go to premium account to share premium 20. That's it, done, close. No multiple entries, only one entry. Sir, why it is like that, sir? Why it is like that is simple. Earlier, they were paying you in installment. Now they are paying everything in one shot. Clear? Earlier, they were paying you in installment. Now they are paying everything in one shot. Clear? Okay. Sir, hangandre ide easy, sir. Ide easy, but exam alli idan kodalla. Clear? Exam alli installment kodtare. Okay. Now let's solve the example. DK and Company Limited issued how much? 110,000, 5 crores rupees, 5 crores equity shares of 10 each for a premium of 4 per share payable on application. Payable on application. Listen to me carefully. How many shares are issued? 5 crore. How much? 5 crore. Each share is having face value is equal to 10. Here, see 5 crore equity shares of 10 each. Andre face value is 10. At a premium of 4 per share. That means what? It is not issued at face value. It is issued at face value plus premium. That is 14 rupees. That is 14 rupees. And what next they are telling? This premium is payable on application itself. So when they are applying, that time only you have to pay the premium. You have to pay the premium. So entire money is received in one shot. They are not told any installment, any application, nothing. They are not told anything, right? First call, final call, issue, allotment, application, nothing. So what we'll do? Pass an entry. One entry only. Why to pass multiple entry? Because it is happening in lump sum. Correct or no? All the money is received on time of application only. Correct? Sir, premium is received only on application. No, premium is also received. Your face value is also received. So what we'll do? Bank account debit. How much is the money which we are receiving? Sir, 5 crore share into 14 rupees each. Can you calculate? 5 star 14. 70 crores. 70 crores. To share capital. How much? 50 crores. Sir, how 50 crores, sir? 5 crore into 10. 50 crores. To share premium. How much? Balance, no, 20 crore. Don't sit and calculate. Debit credit should match. 70 minus 50 is 20. Clear. If you want to calculate, also calculate. How much? How many shares? 5 crore into what is the premium? 4 rupees. Clear? Yes? Okay. This is the journal entry. Finish. They have also done the same. So what they have done in your book? First bank account to share application, then share application to share capital, security premium. ನಾವೇನ್ ಮಾಡಿದೀವಿ? ಈ ಶೇರ್ ಅಪ್ಲಿಕೇಶನ್ ಬಿಟ್ಟಿದೀವಿ. ಡೈರೆಕ್ಟ್ಲಿ ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಡೆಬಿಟ್ 7,000 to share capital 5,000 to security premium 2,000. They are represented in lakh, we are represented in crores. Ashte. Clear? Yes? Okay. Next, DP and Co Limited issued 5 crore equity shares of rupee 10 each at a premium of 4 payable like this: ₹1 rupee per share on application, ₹6 per share on allotment, including premium. Have I not told you? When there is a installment basis, premium will always be paid on allotment. Clear? ₹3 on first call and balance on the final call. So what they are trying to tell you is, listen to me very carefully. While you apply, pay ₹1. While allotment happens, pay ₹6. In this ₹6, ₹4 is premium, ₹2 is capital. Clear? Next, on first call, you pay ₹3. You pay ₹3. So total it 1 plus 6, 7, 7 plus 3, 10. How much you should actually receive? Sir, I should actually receive is ₹10 is the face value, plus I need to receive ₹4. That is total ₹14 I need to receive. How much you are actually receiving? 1 plus 6, 7, 7 plus 3, 10. So remaining 4, that will be received in final call. Final call. How much? ₹4. This will go to capital. This will directly go to share capital. This will go to capital. This will also go to capital. So 1 plus 2, ₹3 capital. Correct? This is also will go to capital. Clear? 1 plus 2 is ₹3. 3 plus 3 is ₹6. 6 plus 4, ₹10. So total ₹10 will go to capital and ₹4 will go to premium. Clear? Understanding everybody? So what they have given is, they have given on application how much, on allotment how much, and they have given you on first call how much, but they have not given amount directly. Instead what they have written, and the balance on final call. So you have to find out how much is the balance. So we found out how much is the balance. 1 plus 6 plus 3 is ₹10. I should have received ₹14 per share. So what is the balance? ₹4. What is the balance? ₹4. So can we take the journal entries? Can we solve the journal entries? Yes, let's do the journal entries. Here I'll open the question here. Okay, let's solve it. First is what, sir? First is application, sir. First, let's write down the numbers so that we can solve it easily. Sir, issue price is how much? Sir, issue price is 14. Nominal value is how much? 10. Correct? Okay, fine. On application, how much you have to receive? Sir, on application, we have to receive ₹1. Correct? Yes, sir. On allotment, how much? Sir, on allotment, we have to receive rupees, how much? 6. Correct? In this 6, ₹4 is premium and ₹2 is towards capital. Okay? Next. First call. 3. Final call. 1 plus 6, 7. 7 plus 3, 10. So remaining 4. Clear? So first entry is on application. What is the entry, Appa? Bank account debit to share application account. Correct? Now what is the entry? Sir, ₹1 into how many shares we are issuing? 5 crore shares. 5 crore shares. So that will be 5 crores. 1 rupee into 5 crore is 5 crores. Okay. Next, narration is important, appa. Being share application money received. Next, allotment happens. Yes, sir, allotment happens. Allotment happens. Yes, sir, allotment will happen. Yes, pass the entry. Allotment money is receivable. Yes, sir. Share allotment account debit. Share allotment account debit. How much? How much is the allotment money? Sir, 5 crore shares into 6 rupees, sir. Into 6 rupees. So that is 30 crores. Yes. To share capital. How much share capital? Sir, 5 crore shares into 2 rupees each. So 10 crores. Then 2 to share premium 20 crores. Sir, how 20 crores? 5 crore into 4 rupees each. Clear? Next. Should we receive this money? Yes, we will receive this money. What is the entry? Bank account debit 30 crores to share allotment account 30 crores. Okay. Earlier, when we received the share application money, we have not transferred it to share capital. We have only kept it under share application account. Correct? Now we need to transfer it to capital. Correct or no? Application money transferred to capital. So what is the entry? Share application account debit. How much we received? 5 crores. To share capital 5 crores. See, ultimately this money is also received towards share capital only, no? So that is why we are transferring it to share capital. Clear? Next. Sir, what about we need to receive this money, sir? We have already received the money, sir. Here, we have already received the money. Here. That money only we are now shifting it to share capital account. Clear? Next. Sir, first call. Yes, very good. First call. First call. What is the entry? First call account debit to share capital account. See, if you look at this carefully, here also we debited share allotment, then to share capital. Same appa, entry always remains same. Now, what is the word we are using? First call. Why we are using first call? That time it was allotment. That is why we use the word allotment. Here it is first call. That is why we are using first call. If it was second call, then we will use the second call. But the entry remains the same. But here one additional entry, that is share premium. Once share premium is totally paid in the allotment, again it will not come. Clear? So here it will be only share capital. So what is the amount? Sir, 5 crores into 3. 3 rupees, no? Here. This one. So 15 crores. 15 crores. When you receive the money, what is the entry? Sir, bank account debit 15 crores to first and final call. 15 crore. Don't buy at the entries. You should remember based on the logic. I told you this acts like a receivable account, asset account. So that is why when it goes up, it was debited. Now we have already received the money. The balance should come down because it is no more receivable. That is why we are crediting it. Clear? Yes? Okay. Next, final call. Final call account debit. Same entry to share capital. Any change in the entry? No change. What is the amount? 5 crore into how much? 4 rupees. Correct? That is 20 crores. Next, when we receive the money, what is the entry? Bank account debit 20 crores to final call account. Clear? Yes. Any doubts in this? Any doubt in this? No doubts? Please note it down. I know answer is there in the book, but I have written in a better manner with explanation, so it is better you take it in the book. Please. If you can't write it down, please take a screenshot at least. Okay, taken? Yeah. Next screenshot. Done? That is what you have done. Your book also they have done. Only thing is they have not recorded bank entries. Why they have not recorded bank entries, sir? Because they have given you cash book. So instead of recording the entries, they have recorded here. Clear? Okay. Issue of shares, I have already told you, not allowed. That is what they are explaining. Issue of shares at discount. A company shall not issue shares at discount, legal consequences and all. So if you issue also, it will become void. I hope you know what is void. Void is a thing where the agreement or that issue itself is totally illegal. I mean, it is not considered as legality. There is no legality over it. Clear? This is important. See, discount is not allowed, but in only one exception. However, a company can issue shares at a discount to its creditors when its debt is converted into shares in pursuance of statutory resolution plan or debt restructuring scheme. Sir, there is something called as, see, I have taken loan from multiple banks. I have taken loan from multiple banks. Now I am unable to repay them. I am unable to repay them. So what I do is I tell the bank, see, I am unable to pay you, but I will pay you in future. So what let's do, whatever debt you are given, no, let's convert that debt into equity shares. That means what? Suppose if somebody is giving me 1 crore, what I tell you is I will give you shares worth 1 crore. So let's cancel the debt. Let's cancel the interest and principal. Everything will cancel. Instead, you become my owner. You become part of my owner. Okay. So what I do, 1 crore, whatever you have given debt, no, for that I will issue the shares. Okay, done. Now I will issue the shares. While issuing those shares, I can issue it at a discount. I can issue it at a discount. Sir, why I am issuing it at a discount? Why you are issuing a discount? Look here. How much is the, say, let's take an example. 10 lakh rupees is the debt. You want to restructure. You want to restructure. Okay. You want to issue shares instead of paying the money. So each share is 100 rupees. Each share is face value. Okay. So 10 lakhs divided by 100 means how much? 10,000 shares. Okay. Now the loan givers or money lenders will not agree to this. They say it is very less. It is very risky to deal with you. So what they say is, don't take the issue price as 100, take the issue price as 50. When you are unable to pay the loan, what is the guarantee that you will generate any profit in the future? So what they will do is 10 lakhs divided by 50. Now how many shares? Can you tell me? Please. 20,000 shares. Now they want more shares. Who? The lenders. Why? Because they are telling you it is a very risky job. I don't know whether you will be able to generate any profits. So you better give me maximum number of shares. So they take 20,000. Clear? So only during debt restructuring, this is called as debt restructuring. Why it is called as debt restructuring, sir? Because there was a debt of 10 lakhs, but you are unable to pay it. So you are trying to restructure the debt. Instead of paying the debt, you are trying to restructure the debt into equity capital. You want to convert that debt into equity capital. That is why it is called as debt restructuring. Only during debt restructuring, you can issue at discount. Clear? Okay, very good. Let's go. Illustration number 1. Illustration number 1. So P Limited was registered with an authorized capital of how much? 1 crore. sorry, 10 lakhs. My mistake. 10 lakhs. Divided into 1 lakh equity shares of 10 each. Out of which 50,000 equity shares were offered to the public for subscription. That means authorized capital is 10 lakhs, but they are not issuing entire 10 lakhs in one shot. Rather, they are issuing only 50,000 equity shares. This 10 lakh is divided how, sir? 1 lakh shares of 10 rupees each. So instead of offering the entire 1 lakh, they are offering only 50,000. Clear? Then the shares were payable as under 3 rupees per share on application, 2 rupees per share on allotment, 2 rupees per share on first call, 3 rupees per share on second call and final call. So second call itself is the final call. So what is the total? 3 plus 2, 5, 5 plus 2, 7, 7 plus 3, 10. So there is face value is also 10, the issue price is also 10. So there is no concept of premium. So what is the journal entry? Please start. Let's start the journal entries. See what they are telling below the question. The shares were fully subscribed for the money and was duly received. Show the journal entries and cash book entries. Okay, first we'll record the journal entries. The first entry, bank account debit. How much money we are receiving? Sir, 3 rupees on application. Very good. 3 rupees into 50,000 means 1,50,000. Correct? Huh? Correct, sir. Then 2 share application. 1,50,000. Next. Allotment happens. Yes, sir. Allotment happens. You need to receive money on allotment. Yes, sir. We have to receive money on allotment. So share allotment account debit. How much you are receiving? Sir, we will receive 2 rupees. Very good. So 50,000 into 2. That will be 1 lakh. 2 share capital. You will receive the money. Yes, sir. So bank account debit 1 lakh. 2 share allotment account 1 lakh. Next, transfer from application to capital. This one. What is the entry? Share application account debit to share capital. How much? 1.5 lakhs. 1.5 lakhs. Clear? Next, first call. How much was the first call? 2 rupees per share. So first call account debit. 50,000 into 2 rupees, 1 lakh. 2 share capital 1 lakh. Next, when we receive the money, bank account debit 1 lakh to first call 1 lakh. Next, second and final call. Second and final call account debit. How much? 3 rupees. So 1.5 lakh to share capital 1.5 lakh. Next, when you receive the money, bank account debit to second and final call 1.5 lakhs. Clear? Yes, that's it, Appa. Now, if you look carefully, check the total of share capital everywhere. Wherever share capital is created, here share capital created, how much, sir? 1 lakh. 1 lakh plus. Here share capital created, yes, sir. How much? 1.5. 1.5 plus. Here also share capital created, Yes, sir. How much? 1 lakh. Then here also share capital created. Sorry, here. How much? 1.5. Total this 1 plus 1, 2 lakhs plus 1.5 plus 1.5, 3. Total 5 lakhs. What is the number of shares I issued? 50,000. What is the per share price? 10 rupees. Total 5 lakh. Have we received the money? Yes. We wanted 5 lakh, we have received 5 lakh. Only thing is we have received this 5 lakh in an installment basis. In an installment basis. If you want to open a cash book, how does your cash book look like? Wherever bank has been debited, check here. Here, to share allotment 1 lakh, to share application 1.5 lakh here. Then to first call 1 lakh, to final call 1.5 lakh by balance carried down 10 lakhs. Sorry, 5 lakhs, not 10 lakhs. 5 lakhs. Done. That's it. Okay. Your institute has done without bank entries, which is very difficult for you to understand. You better copy it down. Take a screenshot at least. Please take a screenshot. Take now. Okay, done? Done? Okay. Narration is important. I have not written narration, but you have to write it in your exams. Be careful. Illustration number 2, please. Wonder Limited issued 10,000 12% preference shares of 100 each at a premium of 10 per share payable as follows. Sir, out of syllabus, sir. You told only equity share capital. Now suddenly, preference shares is coming. No change, appa. Everything will remain same. Here, one more thing I want to address. I had forgotten. So here we use the word equity share capital. I have missed writing it. Equity share capital. Equity share capital. Equity share capital. Here also equity share capital. Please be careful. If the shares are equity, then we'll write down equity share capital. If the shares are preference shares, instead of writing equity, we will write here preference shares. Aste. ಏನು change ಇಲ್ಲ. Journal entry will remain the same. Instead of equity share capital, we will use the word preference share capital. Clear? Yes? Please be assured about this. Equity share capital you need to write when you are issuing equity shares. I missed it, but please write down. Clear? Okay. So what they are telling you is they have issued 10,000 preference shares of 12%. 12% preference shares andre ಏನು ಗೊತ್ತಾ? Sir, what is this 12%? What is this 12%? See, 12% is rate of dividend. Rate of dividend. That means every year you have to give 12% dividend to them. 12% on what, sir? 12% on their share capital. 12% on their share capital. Sir, but for equity share it was not like this, sir. Correct. That is what I told you in the first class. What did I tell you? Equity shares are owners. They may get the dividend, they may not get the dividend. How much dividend they get? They don't know. They may get 5%, they may get 10%, they may get 20%. Whereas preference shares are not like that. They will always get fixed rate of dividend. Fixed rate of dividend. We have to give them dividend. That is why I told you preference share capital or preference shareholders will never become owners of the company. That is why they are called as dividend. Sorry, that is why they are called as liability. This things was discussed. This thing was particularly highlighted by me. Clear? So they get the dividend, fixed dividend. And they don't have any time, like they have a time limitation within which the company has to repay them. Whereas in case of equity, there is no fixed percentage of dividend and there is no time limitation. They cannot come and ask for the money back. At best, what they can do, they can sell their shares to somebody else and get the money. But company will not pay them. Clear? So these are liability. Okay. But journal entry remains the same. Sir, how journal entry remains the same? Sir, if it is liability. Sir, share capital also, if you remember, capital account, liability account, income account, all fall under the same thing. Modern approach. Increase credit, decrease debit. That is why journal entry will not change. Clear? Let's start accounting. First, what is the entry? They have received how many? 10 lakh rupees they want, divided into 1 lakh equity shares of 10 each. Correct? Oh, not equity shares, sorry. Oh, sorry. I'm reading illustration number 2. Sorry, my mistake. Issued 10,000 12% debentures of 100 each at a premium of 10 per share. That means what? 10,000. What is the issue price? Sir, issue price is nominal value plus premium. Plus premium. What is the nominal value? 100. Premium is 10. So total 110. Now this 110 is split like this, sir. On application 30. Allotment 30. Including premium anta bardidaru bracket alli. Including premium. That means out of this 30, 10 rupees is premium. Towards premium. Next, first call. First call is how much? 25. Next, final call. How much? 25. Total this 30 plus 30, 60. 60 plus 50, 110. Clear? Now, on application, what is the entry? What is the entry on application? Oh, wait, hold on. Oh, wait. They have given adjustments also. Hold on. Applications were received for 12,000 shares. For how many shares? 12,000 shares. And the directors allotted 10,000 shares and rejected application for 2,000 shares and money was refunded. The allotment money was duly received while the first call money was received on 9,000 shares and the final call money was received only on 8,000 shares. So what they are telling you is total shares issued is how much? 12,000. Applied how much? Applied 12,000. So 2,000 rejected. 2,000 rejected. Okay, sir. Then you made the call. You made first call. Yes, sir. I made first call. First call for how many shares? 10,000 shares have to pay me 25 rupees. Correct? That is your first call. But how many paid? Only 9,000 paid. So that means 1,000 rupees is not yet received in your bank account. Is not yet received in your bank account. Final call. How much you called for? 25. How many people paid? Only 8,000 shares paid. So remaining 2,000 not yet paid. So again, that much money will not be received in bank account. Clear? So on application, how much shares you have received? So what is the entry? Bank account debit to share application. To share application. How much? 12,000, not 10,000. 12,000 applied. How much each share? 30. So that will be 3.6 lakhs. Clear? Allotment. What is the entry? Share allotment account debit. How much? Sir, 10,000 shares into how much you have to receive on allotment? 30 rupees each. 10,000 shares into 30 rupees each. That will be 3 lakhs. That will be 3 lakhs. Now we'll do one upgraded version of the journal entry. What is the upgraded version of the journal entry? Sir, this share application money also needs to move to share capital. No, this also needs to be transferred to share capital. Instead of passing one more journal entry to that, can we include that here only? Share application account debit. How much? Not entire 3.6 lakh, only 10,000 shares of 30 each. Of 30 each. So that will be 3 lakh. Correct or no? To share capital. To share capital. Sir, how much should we pass here? First, hold on. Listen. This 3 lakh will definitely come to share capital. Why? Because see here, this is only getting moved from here to share capital account. Correct? So that 3 lakh will surely come. Okay? Plus, out of this 3 lakh, something will also move to share capital. Correct or no? How much is that? 10,000 into 20. 10,000 into 20, sir. Why 20, sir? See, out of this 30, 20 rupees is towards share capital, 10 rupees is towards share premium. Is towards share premium. Clear? Yes, everybody is understanding? So that will be 5 lakhs. To share premium. How much? 1 lakh. How 1 lakh, sir? 10,000 shares into 10 rupees is the premium. Sir, whoever has not understood this journal entry, just think that if to reverse this, I would have passed one more journal entry. What was that journal entry? Share application account debit 3 lakhs to share capital account 3 lakh. Instead of passing one more journal entry, what I did is share application anyhow is debiting. No, I am getting debiting here. Share capital crediting. No, I am adding that to share capital here. Clear? Instead of passing two journal entries, I am including it in one journal entry. Clear? Next. Sir, can we do it? Yes, you can do it. No issues. Next, when we receive the money in the bank, so bank account debit. Which money? This money has to be received, correct or no? 3 lakh. To share allotment. 3 lakh. Sir, we need to refund also, correct. Out of 3.6 lakh, we are having only 3 lakh worth of shares. Remaining shares will be refunded. Very good. What is the entry? Refund of application money. We have to pay from the bank. So bank balance will definitely come down to bank account 60,000. Our liability will also come down. So share application account debit 60,000. Clear? Next. Third one. First call. What is the entry? First call account debit. How much is the amount? 25. So 10,000 into 25. That will be 2.5 lakh. To share, sorry, use the word preference share capital. My mistake, please. To preference share capital. 2.5 lakh. In fact, the right sentence to use here is 12% preference shares. 12% preference shares. Correction. %12% preference share. Here also, everywhere it has to be included. Preference. Okay. Done? Wait, I will write it down only. Why to make it so complicated? Okay. Use the word 12% preference shares. Next, when we receive the money, it will be bank account debit 2.5 lakh to first call 2.5 lakhs. Next, final call. What is the entry? Final call account debit. Here also you can use 12% preference shares, final call. 12% preference share, final call account. Debit, how much? 25, 25. Again 2.5 lakh. To 12% preference share capital 2.5 lakh. When you receive the money, bank account debit 2.5 lakh to 12% preference shares final call account 2.5 lakh. Clear? Yes, any doubts in this? Anybody having doubts? Okay, done. This question is done. Please note down. Please take the screenshot. Excuse. Okay, yeah. Cash book, you can do homework. Next comes the concept of under subscription of shares or over subscription of shares. Sir, what is under subscription or over subscription? Listen to me carefully. If you are issuing 10,000 shares and they have subscribed only 8,000, then this is called as under subscription. Why? Because you were ready to issue 10,000, but public is ready to subscribe only 8,000. So they are under the limit fixed by you. So this is called as under subscription. You are issuing 10,000, but public has subscribed for 15,000. That means you have received application for 15,000. So 10,000 is your limit. Public has asked for 15,000. So this is called as over the 10,000. Correct or no? So this is called as over subscription. Okay. Now under over subscription, there are two ways. In right now the question which we discussed, this question which we discussed. How many shares we wanted to issue? 10,000, sir. How much application we received? We received for 12,000. So this is example of oversubscription, correct or no? So in this case, what did we do? Oversubscription, whatever money was there, we cancelled the application, we refunded, correct or no? Here, refund. Entire extra money which we received, we refunded. Clear? That is one way apart. There is one more way, which is actually tricky part, which is where your most of the questions will come from. What is that, sir? We have received application for how much, appa? 15,000. How many shares are we issuing? 10,000. Let's take example. 4 people have applied. How many? A, B, ಸಿ ಡಿ 4 ಜನ ಅಪ್ಲೈ ಮಾಡಿದ್ದಾರೆ. ಓಕೆ, ಸೊ ಸೇ ಎ ಹ್ಯಾಸ್ ಅಪ್ಲೈಡ್ ಫಾರ್ 5,000, ಬಿ ಹ್ಯಾಸ್ ಅಪ್ಲೈಡ್ ಫಾರ್ say 8,000, C has applied for 3,000, D has applied for 1,000. So total 9 plus 3, 12, 12, 17,000 total. Oh, sorry, 17,000 barbadalva, 15,000 barbek namge. Okay, we'll correct it here. 7,000 here. 2,000. Total 12, 15, 15,000. Okay, so in earlier case, what did we do? We did like this. We rejected C completely. I said no, I will not give you any share. Done. That's it. So whatever application money was received on this 2,000, I repaid. That's it. Over. I am not giving you single share. To whom? To C. But that becomes unfair. Correct or no? That becomes unfair. So what they do is, they don't do like this. Instead, they do it like this. Say how many shares application? 5,000, 7,000, 2,000, 1,000. So entirely, rather than rejecting the C, what I will do is, I will do like this. See, you have applied for 5,000, no? I will give you 4,000. How many? 4,000. How many I will give you? 4,000. Now, B has applied for 7,000, no? B has applied for 7,000. So, I will give him 6,000. Oh, sorry. I can't even give him 6,000. Wait, hold on. 10,000 is the maximum. So, for him, I will give him 3,000. For him, I will give 5,000. Okay. For C, I will give him 1,000. For D, I will give how much? 8, 9,000. Total 10,000. Now you look carefully. In first case, what did we do? In first instance, what did we do? Sir, A, B, C, D applied 5,000, 7,000, 2,000, 10,000. So what I did is, I rejected C. And issued to A, B, C. A, B, D. So C's money I refunded. Clear? In second case, what did I do? Sir, A applied 5,000, B applied 7,000, C applied 2,000, D applied 1,000. So rather than rejecting anybody, what I did is, A applied 5,000, no, I will give him only 3,000. I will give him only 3,000. B applies 7,000, no, I will give him only 5,000. C applied 2,000, no, I will give him only 1,000. D applied 1,000, I will give him 1,000. Clear? Yes? This is called as pro rata allotment. Pro rata allotment. That means I am not rejecting anybody, rather I am allotting them based on some ratio. Of course, here we didn't take any ratio, but I am just telling you, this is an example given to you, but I am going to allot them based on some ratio. So ratio kind of how, sir? If you have applied for 5 shares, I will give you 3 shares. See here, in this case, if you have applied for 5 shares, I will give you 3 shares. So you applied for 5,000, I will give you 3,000. Clear? Some pro rata basis, I will give the shares. So I will not reject anybody, rather I will give everybody some shares, but not fully. Clear? Now here where the tricky part and our adjustment entries will come. Sir, what is the tricky part, sir? Now tell me, while applying, how much did A pay? While applying, how much did A pay? A actually paid, suppose let's say application money is rupees 10. Application money is rupees 10. Correct? So A paid how much? A paid 5,000 shares into 10 rupees. Correct or no? Don't tell me, sir, why I will pay for 5,000? Sir, they have given only 3,000. Sir, they have given, this given happens when allotment aadmele idagate. But when you are applying, how How much did you apply for? 5,000. If you have applied for 5,000, you would have given how much? 10 rupees each. So you would have given 50,000. Correct? How, sir? Yes, you are right, sir. Correct. Okay, very good. Now, how many shares were actually issued? Only 3,000. So, how much money I should have received? Only 30,000. But how much I have received? 50,000. This extra 20,000 is there, no? This excess 20,000 received on application. This extra 20,000 which was received on application will be adjusted on future calls. On future calls. Clear? Future calls andre ಏನು sir? Future calls andre simple sir. When allotment happens, say allotment happens and I call for rupees 20. I call for rupees 20. How much? 20. Correct? Yes sir, I called for rupees 20. Yes, very good. Now, how much Mr. A has to pay? Sir, Mr. A has 3,000 shares. He has to pay 20 rupees. So how much he should pay? 60,000, sir. 60,000 he has to pay. But he will not take entire 60,000. Why? Because you already have 20,000 with you. So excess money on application. Excess money on application. 20,000. So how much you will receive? You will receive only 40,000. Why? Because out of 60,000, I have already received 20,000 earlier. That 20,000 I am going to adjust against the new money which I need to receive. This was next allotment receivable, money receivable on allotment, but I will not receive entire 60,000. Why? Because I already have excess money of 20,000 which will get adjusted against that 60,000 and only this balance will be received. Understanding? Yes. So this is the concept of pro rata allotment and this is the concept of adjustment. This is the concept of adjustment. Please take the screenshot. Clear? Yes? Okay. Guys, while I was doing this, I suddenly remembered in our last sum, we did everything, correct? But we missed our adjustment part. In our last sum, we missed this. I explained this concept, but I didn't record it. I recorded full payment only, correct or no? I need to change that. Where did we solve that? Here. Sir, in your first call, this will change, sir. This will change. Why this will change? How much money was received on your first call? You received only from 9,000 shareholders. 9,000 into 25. 9,000 into 25. So that will be 9,000 into 2.25 lakhs. Clear? Sir, then what happens to the balance? The balance will remain in this account only. 2.5 lakh ali 2.25 lakhs bantu. Remaining will be still shown as balance receivable and it will be shown in first call account. Or there is one more way to show this. What is one more way, sir? I'll tell you. first call account only, or you can transfer it to calls in arrears. Calls in arrears. Sir, what to do, sir? Sir, you debited first and final call account for 2.5 lakh. But how much money did you receive? I received only 2.25 lakh, sir. So remaining 25,000. So remaining 25,000 is still receivable. So the balance will remain in this account only. No problem. Okay, good. Sir, I don't want to show it in this account. I want to show it in a different account. Okay. What is the name of the different account? The name of the different account will be calls in arrears. So what I will do is I will show that in calls in arrears account debit. How much? 25,000 to first call account. 25,000. 25,000. Now look at it. First call, how much was debited? 2.5 lakh. How much is credited here? 2.25 lakhs. So what is remaining? 25,000. That was having a debit balance. Now you don't want to show debit balance in that account. You want to close that account. And you want to show that clearly that this money has not yet been received. ಅಂತ ನೀವು ಕ್ಲಿಯರ್ ಆಗಿ ತೋರಿಸ್ಬೇಕಂದ್ರೆ ಯು ಕ್ಯಾನ್ ಟ್ರಾನ್ಸ್ಫರ್ ದಟ್ ಟು an account called as calls in arrears account. The name itself says calls in arrears account means we have already called the money, but people have not paid. People have not paid. So that is called as calls in arrears. So we have called the money, but some people have not paid the money, and that much, how much they have not paid, that is 25,000. That much will be shown in calls in arrears account. Clear? Same thing goes here upon. 8,000 shareholders paid 25. Only 8,000 people paid 25. So that will be 2 lakhs. That will be 2 lakhs. 2 lakhs only, no? Sir, remaining, sir, remaining, again same. Remaining balance receivable can continue in 12% preference final account only, or can be transferred to calls in arrears account. So if you want to transfer, then what you do? It is an asset account, correct or no? Calls in arrears is an asset, type of an asset account. Why? Because we have to receive the money, correct? So how much? 50,000 to 12% preference final call account. 50,000. So here what happened? 2.5 lakh was debited, 2 lakhs were credited. The remaining 50,000 can continue in that account only. Or if you don't want to continue that account and you want to show clearly that this money has not been paid to us, you can show it in calls in arrears. 50,000. Now what will be the total of calls in arrears? Look here. Here 25,000, here 50,000. The total calls in arrears balance will be 75,000. Clear? Please take a screenshot again. Sorry, we missed it that time. Okay. Do one thing. Take a screenshot again of this entire sum, please. I don't want you to go wrong again. Please. Quickly. Earlier screenshot, kindly delete. Please delete earlier screenshot. Okay, done? Yeah. Coming back to this concept, I hope this concept is clear. How we adjust the money? Yes? Okay. That comes in pro rata allotment. Clear? Total, what is over subscription, under subscription, I have told you. Now, in under subscription, anyhow, it will get failed. Your issue might get failed or your underwriters might subscribe. In case of over subscription, what happens? You may reject some application, accept some application in full, and allotment to the remaining application on pro rata basis. So you can accept some application on full, you can reject some application, and some application you can allot on pro rata basis. In our case, if you look carefully, we didn't reject any application. We allotted to A on pro rata basis, to B on pro rata basis, to C on pro rata basis, to D we allotted in full. Whatever we applied, that much we gave. Clear? Yes? Okay. What else is remaining? Okay. And sir, this excess which we have received, what is this called, sir? This excess amount which we have received, this excess 20,000 whatever we have received, what is this called, sir? This is called as calls in advance. Calls in advance. Have we not received advance? See, this extra 20,000 is towards what? Sir, is towards allotment. Correct? So, have they not given the money in advance during application only? Correct or no? It is like an advance. Till allotment happens, it is like an advance. So, this will be transferred from share application money to calls in advance account. Sir, in our case, what is happening is it is getting adjusted against allotment. Sometimes his excess money would be so much that you may have to go ahead and adjust it till final call or till first call. Clear? Everybody? Yes? You may have to adjust it till first call or second call. So, till you adjust it, where will the money sit in? The money will sit in calls in advance. Just like how there is a calls in arrears. Correct or no? Calls in arrear means what? We have already called, they have not paid the money. It is opposite of that. We have not called, they have paid the money in advance. It is kind of a liability account. And it will sit in calls in advance account. See, 20,000 we are having excess. No, if he comes and asks me, give me back that excess, I need to pay. Correct or no? I am obligated to pay. So that is why it will sit in calls in advance and it acts like a liability account. Clear? Done. Then what else? Okay. See, whatever calls in advance is there, no, on that you can pay interest also. On calls in advance, you can pay interest. Okay. So, whenever interest means why I have to pay interest, sir? Because have you not received the money in advance? Yes, sir, I have received money in advance. So, can you use that money in your business? Yes, I can use the money in business. So, does it mean that you are taking the benefit by receiving the money in advance? Yes, sir, I am taking the benefit by receiving the money in advance. So, because you are using the money in advance, receiving the money in advance and using it in the business, please pass on some benefit to the shareholders. That is why you can pay interest. You can pay interest on calls in advance and that interest should not be more than 12%. So you can pay at max 12%. You can pay at max 12%. Clear? Yes? Okay. Now, the journal entry part of this interest as well as the adjustment, we will see it in the next class. Clear? As of today, I think we have a lot of information which need to be processed. Let me not overload you. So tomorrow's class, I will explain you how that adjustment, this adjustment, whatever we have spoken, no, how this adjustment will be accounted via journal entries. How journal entries will be passed for these adjustments. We'll see that in tomorrow's class. Okay. And we will even see how to account for this interest. Clear? Of course, I can discuss right now only, but today we have already put lot of information. So let's not overload ourselves. Okay. Tomorrow we'll finish this off. We have already completed the majority of our share capital part. So we will try to solve majority of the sums tomorrow and close this particular topic in this chapter. Yeah, there is further topics. Preference share capital will come, redemption of preference share will come, debentures issue will come, redemption of debentures will come. So all those things will come, but this majority topic we should be able to cover tomorrow. Okay, thank you guys. Bye bye, take care.